Business Matters, presented by the Guamanian Magazine.
How would Guam fare under President Donald Trump's recently announced tax reform plan? One local economist says it's hard to say right now. The Bank of Guam's Joseph Bradley says Trump's proposal is long on rhetoric and short on detail. And with tax plans, the devil is usually in the details.
A lot of it is left, I think, intentionally vague at the moment. He is, like I said, he's sketched a broad outline, but he's leaving most of the details to Congress to flesh out. And there's no telling what it's going to look like in the final hour.
Some key points of the Trump plan have been widely released. They include reducing the 7 individual tax brackets to 3 brackets of 12%, 25%, and 35%. The proposal also calls for doubling the standard deduction and eliminating the estate tax and alternative minimum tax. For businesses, the plan would cut the tax rate to 20% from the current 35%. Bradley says the last time tax reform was passed was 30 years ago. He says there's a reason it's not done very often. It's a very complex process.
I think that the notion that cutting the tax rate on the top tax brackets is going to stimulate the economy, that has not been borne out in the past. It wasn't borne out with the tax cuts in the Reagan era or the tax cuts in the George W. Bush era either. In fact, ironically, during the Clinton administration, income taxes were raised and the economy performed much better.
Guam mirrors the federal tax code as established in 1950 by the Organic Act, but local individual taxpayers do not pay federal taxes. So Bradley says the biggest loser might be the government of Guam.
Most people would fit into the lower 50% of the income distribution of the nation as a whole, that a lot of the changes that would be made could affect the government's revenues and could affect them dramatically. There have been a couple of studies done locally with regard to what the tax impact would be based upon the campaign statements that were made last year, and the indications are that the government would lose substantial amounts of revenues.
He says Guam does have the ability to delink from the federal tax code and create its own system. There have been several attempts to determine the feasibility of such a move. Bradley says it wouldn't make a difference in the short term, but could in the long run.
I've been on probably a half a dozen tax commissions over the years that were focusing on that prospect, but the efforts never came to fruition. Now, if we delink from the Internal Revenue Code, we would have to remain revenue neutral, as if we were still implementing the IRC, for a period of 5 years. And so the most reasonable way to accomplish a delinkage would be what has been termed delink and float. That is, delink from the Internal Revenue Code, have our own tax code that is exactly the same as the Internal Revenue Code, and as the Internal Revenue Code is changed in Washington, our local code would be changed also.
For KUAM's Business Matters, I'm Nestor Lecanto.
Business Matters, presented by the Guamanian Magazine.